Hi, everyone. My name is Marsha Greyeyes, and I am the Change Labs Community Manager. I am Kilachini, born for Twitachini, Lugadine, Dashachedo, Sheen Dashanale. I'd like to welcome you to the webinar on learning essential bookkeeping techniques and tips with Arlene Edd. But first, let me talk a little bit about Change Labs, who is hosting this workshop. We believe that entrepreneurship is our pathway to stronger and more resilient communities. By providing creative workspace, tools, resource, and knowledge for our Native entrepreneurs. Through fostering the creation and growth of Native-owned small businesses. To do this, we have 5 programs: resident designer, co-working, business incubator, doing business, and kinship lending. Our resident designer gives one-on-one help developing a website or other creative materials for your business. Our co-working space provides desk space, Wi-Fi, color printing, button making, monthly training, and more to entrepreneurs in the community. We're open from 10 to 3. You're welcome to drop by anytime during the week when we are open. Our business incubator program is where we select 20 high potential Native entrepreneurs each year to help start up and grow their business. Kinship lending, we provide 5% interest loans up to $5,000 to Navajo and Hopi small business owners and vendors and artists across Arizona, New Mexico, Utah, and Colorado. We create resources to help you leapfrog the barriers to entrepreneurship. And we also like to invite you to download our Res Rising app. It is a directory, yellow pages for Native-owned businesses. You can add your business or use it to look for Native-owned businesses in your area. And then on Mondays, we offer 90-minute coaching from 10 a.m. to 5 p.m. You can sign up with our featured business coach for that week or that Monday through our website at nativestartup.org/events. And without further ado, here's Arlene Edd, who will be presenting essential bookkeeping techniques and tips.
Good morning. My name is Arlene Edd, and Yad Edd Bene. Todik evening shlong. Look out the nap as a stream. Ado kintlachini das a chedo trabaja dashanala. It's out a astaninshla. I am coming to you from Santan Valley, which is south of Apache Junction in the valley. I am originally from Shanto, Arizona. I've been doing bookkeeping for the last 40 years, and I've helped businesses across the reservation and also a business in Flagstaff. Currently, I'm a business and finance consultant for my community of Shanto, and I work for, I'm a board member for economic development for the community of Shanto. So today I would like to share and teach on the basics of bookkeeping. So I'm going to share my screen with you. Again, good morning. And this is a picture of Shanto, the canyon. We are developing a business over here, the old Shanto Trading Post. So it's in progress. And best small business bookkeeping and accounting, sales leader, manager, and customer service representative are just some of the hats you wear as a small business owner. Now add bookkeeper and accountant to that list. Unless you're actually running an accounting or bookkeeping business, keeping the records for your business can seem overwhelming. Everything from paying your taxes to planning for the future rides on having accurate numbers. No one article can tell you everything you need to know about business accounting, but I put together tips to help keep it as simple as possible. So there's a lot of small businesses. There's different shops, clothing stores. Starting up your business is part of planning, and it has a wide range of businesses. It's a for-profit business. So tips of small business, bookkeeping and accounting, whether you're just starting a small business or you've had one a few years, these easy tips will help you stay organized. And a lot of on the reservation, we have a lot of vendors that are on the road all the time and running their business. A lot of them are doing out of their home. So just some tips that I'm going to share today. Know the basic bookkeeping and accounting lingo. When you decided to start your business, you were just hoping to make more money than you put in. Now it's time to get up to speed on common bookkeeping and accounting terms. Don't be embarrassed if you aren't familiar with all the technical definitions. This is the time to learn. So as long as you have a calculator, spreadsheets, a notebook, you know, and just different small office equipment you can have, you're ready to go. What is a sale or revenue? A sale is a transaction you receive cash for, also known as money in. Sale can be a service or a product. So there's different types of businesses. You can have a service, go out there and do labor for others people. You can be a roofer, you can be a landscaper, that's a service. Hair salon, barber shops, those are service entities. Or you can be a vendor, sell t-shirts, sell jewelry, sell your product if you make it at home, if you're an artist, you know, anything. So those are the two different types of sales, service or product. What is an expense? Also called money out. An expense is something you pay for, like supplies, office maintenance, etc. Utilities, electricity, water, sewer, you know, those are utilities. Rent, a lot of people rent space to run their business. You can rent a building, you can rent a space, a vendor space. You can rent equipment, office equipment or machinery to run your business. Different types of things you can rent for your business. Those are rent expense. Insurance payments, things that you have to insure to run your business, like your building, your vehicle, machines, those are insurance expense payments. And some other typical ones, bank charges. If you have a bank account, a savings account, and you run your business off of that account, bank charges, they charge you for interest, they charge you overdraft fees, they charge you just to have a bank account, monthly charges. Those are bank charges. Interest expense has to do with, again, with the bank. If you're having a checking account or a savings account, different accounts, those incur interest. So those are interest expense. Payroll and payroll taxes is another example. Some employees, some businesses have one or two employees, up to a small business up to 50 employees. Those are at least a number that qualifies you as a small business owner. And payroll taxes are all expenses, and the cost of the payroll, people that you put on your payroll, those are all expenses. Travel, when you go out and travel for your business, you attend conferences, you go into town to get supplies for your business. All of that is our expenses. You take in lodging, your meals, entertainment, when you take someone, a business person, associate out to eat, to discuss business, to do business. You're traveling and you have to grab lunch. You have to, all of that is deductible. They're expenses, meals, entertainment, and fuel. All the fuel costs when you go out to traveling on the road for your business, all the fuel is, they're all expenses. Business mileage, under fuel, also you have to keep a log of your mileage. All of that is expenses. The receipts are all expenses. The next one is auto repair and maintenance. Anything to do with maintaining your vehicle that you use for your business. Sometimes you have to change your oil, do minor maintenance or even major maintenance. All of that is auto repair and maintenance. And there's others that that you can include in your business. Office supplies, equipment expense, office equipment, office furnishing, all of that. These are just some of the few lists that I put on here, but there's so many that you can include under expense. And a lot of us, when we incur costs or pay for things, we normally keep the receipts. And a lot of us are putting our receipts in envelopes or just bundling up and clipping it here and there, maybe in our vehicle, in our purse, you know, or just at home. Maybe you have a place at home where you keep all your receipts. And expenses are cost to your business. It's what your you pay to run your business. What is a liability? Liability are, a lot of people confuse liability with expenses. A liability is something you owe money on, such as a small business loan, a vehicle loan, a credit card. Those are loans. You can, if you have, there is a difference between renting a building for your business and owning a building to run your business. And if you have a mortgage against that business, that's a loan. So, and personal, if you have a signature loan, you borrowed money from the bank for your business, you took out a personal loan, those are a liability. You took a loan out to buy a vehicle or equipment, big equipment, machinery, trailers, all of that are property. They are, if you have a loan against it, all that is liability. So a liability refers to loans. What is an asset? An asset is an item your business owns, like a bank account, office equipment, machine, tools, a vehicle, office building, the value of the land, your property. There's so many things you can use as an asset. An asset is typically something that has value. Say, if you go to buy a vehicle to run your business, the value of that vehicle is what you will put down in your books as the value of your asset. And you can total up your assets, and that starts your process in keeping records of what you are putting into your business. So a bank account, a checking account, a savings account, a credit card, prepaid credit card if it has a balance, not the charges, but if there's a balance, a positive balance on it, those are assets. It's money you have on hand, what's available to you. It's equipment that's, if you have any type of equipment or vehicle you have paid off and you're using it in your business, you have to put a value on it and put it in your books. So what is a revenue? Revenue is income your company makes on a sale. To determine your profit, subtract your expenses from your revenue. Your revenue comes through your cash sales and also your debit and credit card sales. And this is part of your asset, but it's also part of your sales revenue when you're doing business day to day. It's money you receive for a product you're selling, and it's a type of record that you can keep in your books for sales revenue. What are accounts receivable? Accounts receivables refer to the money your customers owe you when you send them an invoice. What are accounts payable? Accounts payables refer to the money you owe to your debtors when they send you an invoice for payment. So an invoice, I have a picture of it here, works in two ways. It can work for you to bring you sales when you sell a product to someone, and instead of giving you cash, you give them an invoice so they can pay it later. When they pay it later, they have like a 10-day to pay for it, or 15 days, or 20 days, or 30 days to pay for. It all depends on what type of number of days you want that money to be, the actual cash to be in your business before for collection. So when it's on, you gave your customer the product, you sold it to them, but you give them an invoice to verify that the sale was made. The invoice you can bill them for later. That's called accounts receivable. Now, invoice also works as accounts payable when you owe someone. When you go to into town and you buy a product, or I guess the best example is when you get on the phone and to your supplier and you ask them you need some products, and immediately, they will open up a credit account for you and they will send you an invoice and send you the product. The invoice is an agreement between you and your the person that you bought the product from to pay them later. So accounts payable refers to the money you owe to your debtors when they send you an invoice for payment. So you can utilize an invoice in two ways. So I put up a sample here of kind of like journalizing how to put in accounts payable and accounts receivable. Here it says a gas expense. This person here, what they got was a fuel expense, $28. It went to accounts payable and they still owe it, but the gas was purchased. and the $28 is now in your credit balance, meaning that it will be paid for later. And then on the 26th, the owner paid cash for $900 for lawn mowing service that they did probably 2 or 3 weeks before, and $300 was in accounts receivable and to pay for it later, but $900 was put in cash. So the customer came in and paid cash, and $300 he put on credit with you to pay for it later, but the total revenue is $1,200. So, and then on the 27th, advertising expense, you went out and paid for advertising, maybe a sign, and you pay cash immediately. So there's no accounts receivable there because it was paid the same day. And then you go down to the 29th, and in accounts payable, you purchase something and put it in accounts payable. And or here you paid cash for on an account that was in accounts payable, and you paid cash. So that payable account becomes zero. You no longer owe it. So that's kind of like 4 examples that I put in there to kind of show you, explain to you how accounts receivable and accounts payable work. So create the 3 must-have documents for financial services, financial success. Now that you know some of the key terms, you need to put them into use. There are 3 basic documents that will help you answer critical questions about your business. These will help you determine where to commit funds in the future and how to create your business plan. They tell you the story of what is really going on in your business. So basically, I'm gonna explain 3 basic types of financial documents that you can accumulate or create for your business. The first one is called a profit and loss statement, which is also called an income statement. Is your business profitable? Your profit and loss statement is a summary of your revenue minus expenses for a period of time. It shows your profits or losses at a glance for that chunk of time. Example, monthly. Income, revenue, sales minus expenses equals your net income. So over here, I kind of put up a sample of an income statement for the month ending March 31st, 2006. You list all your revenues first. Under revenues, this landscaper had, for the month of March, the revenue was $20,075. And then there was a finance charge income, which is probably through the bank, that goes in there at $100. It's an interest finance charge that was probably part of the account for a finance charge that was charged to people that maybe accounts payable or accounts receivable. Sometimes you can put a finance charge on people that are paying late to you. You can put charges and you can receive income from that. So $100, it makes it total revenue of $20,175. Also cost of sales. If you have cost of sales is when you're running your business, it's products or something that helps you to make those sales. In this case, in landscaping, it's just a service business. So everything is basically, all the revenue comes from labor. So there is no cost of sales. In a cake business, like if we, for example, if there's a somebody make cakes, the cost of sales would be the supplies that is used to make the cake, which is like the cake mix, the all the food, the ingredients that go into making the cake. That would be the cost of sales because those become part of your revenue. And then you go down and you calculate, since there's no cost of sales, your gross profit would be 20,175. After that, you list all your expenses to run that business for the month of March. All the expenses you paid in the month of March, you paid for auto expense, commissions and fees expense, dues and subscriptions, insurance expense. You know, these are where all the expenses that you use, like utilities. If you run your business from a building, utilities will be involved, phone expense, cell phones, anything, bank charges will be in here. All your expenses will be listed here. And then you go down and total your expense. And then you take your gross profit, you subtract your total expense, and then your net income. Your net income shows how your business is doing. And if your expense is more than your profit, then it becomes a loss. When a loss balance shows here, you have to readjust for the following month and kind of plan differently for the next month. So income statement shows how your business is doing. It gives you a summary of your revenue minus your expenses. So next one is your balance sheet. How much is your business worth? Your balance sheet shows the assets, your liabilities, and your owner's equity for your business. It's basically a breakdown of what you owe versus what you own. Remember, assets are items owned by your company. Liabilities are things you owe on. Equity is the value of your business. So you take 1 minus 2 equals 3. 1 is your asset minus your liabilities equals your equity. So that explains, it's basically the value you'd place on your company if you had to put a price tag on it today. Balance sheet and profit and loss statements are what banks need to, evaluate your financial history when you go in to ask them for a loan or a grant or any other type of financial activities. A balance sheet and a profit and loss statement is what a lot of business would put together to show their financial history. So this cake shop is a very simple shop. The assets are your inventory is part of your asset. So here they listed the flour, how much flour they had, fruit, cakes, and then the cash in the till, which is like if you have a cash box, whatever you have in there, or in the bank, if you have it in there, what your balance is, your delivery van, if you have a value on it, those are your assets. If this delivery van is paid off, you need to put a value on it, how much it is worth. Normally a blue book, if you go online and Google blue book value, it will give you kind of an idea. So you put in the year and the amount of mileage is on there, and if it's has poor, average or excellent condition, it'll give you a value, and you put that in there. Money in the bank, if you have the oven you use to bake those cakes, or if you're running this cake shop out of a building, you would put in all your uh, kitchen equipment that are in there, all the ovens, all the refrigerators, all the tables, and everything that you use, the silverware, the utensils, all of that would be in here. The building, if you own it, even though there's a mortgage on it, the value of the building you have to put in there. The same way you can go to your loan doc or purchase documents, see how much you paid for that building or the land that's attached to it, the total property, the value of it. You have to put that in there. And money due from customers, those are your accounts receivables. The value, how much the balance is for a particular time that you're running this balance sheet. You put that in there. And those are your, and then you add it up, and that's your total assets. And then you come down to your liabilities, is anything you owe for all your accounts payables. If you owe someone for your flour mill, your fruit growers, if you still owe on your utilities, you haven't paid for them, you owe on your pickup payments, if you're using that pickup for your business, the mortgages for your building, or any type of equipment that you're using, just the balance of that loan is what you put in here, or the balance of those payable invoices, all of it goes in here. Wages, if you haven't paid somebody but payroll is coming and not until next month, what you owe up to the end of that month, all of that goes in here, your wages, your payroll taxes, anything. So, and then utility bills, if you still owe them, again, it becomes a payable, so it's a liability. So you plug all that in there. And then your business rates, anything you owe for all of that, anything that you have on loan is your liability. So you take your total assets, you minus all your liabilities, and that's your net assets. So this person here, he or she has 165,000 in assets, but he or she owes in 154,000 in loans. So he or she has a total assets of 11,000. So that becomes your equity bill. And a bank or financial institution uses this here to determine if they can loan you, if you have enough assets or what type of assets you have here, that will determine part of giving you how much they can give you and what they can help you with. And then another one, this is the fourth the next statement that I also wanted to share is called a cash flow statement. What is your business cash going? Where is your business cash going? This statement categorizes cash flow into 3 types of activities. Cash flow statement shows your operating, how much does your business make day to day, your total sales revenue. Investing are the assets you purchase for your business paying off. Cash spending on resources to operate your business includes assets, liabilities, and expenses. So in your investments include your assets you purchased. It includes everything, your value of your assets, how much liabilities you have, and the expenses involved. And then the third one is your financing. How much cash have you invested in your business? This can also reflect how much money you've borrowed. What we believe it's best to operate your business debt-free. When you're not making debt payments, you actually get to keep your profits to pay yourself. For example, annually, your total cash minus your spending equals your net operating income or loss. So don't know how to get started creating these documents? You can find 3 free templates online, but as your business gets more profitable or more complicated, you'll need to consider working with a professional to manage these documents. So here at the bottom, I put together kind of an example of what this is explaining. It's basically giving you a picture of what your day-to-day business is doing. When you come to work in the morning, start your business, you need to know how much cash is. It kind of gives you a picture of, let's say if you've been in business for 2 years and you have a pretty good idea how what type of a Monday you can have versus a Tuesday versus a Friday. You know to put traffic into your business. Or if you're on the road and you're doing weekend sales, maybe you have a route that you go to and you know where your business will profit more and thrive more. So it kind of gives you a picture from your day-to-day business activities. So down here, cash receipts from your customers. You should know how much you have on cash receipts, cash payments to suppliers, how much you should have an idea how much supplies is available for sale. And if you need to go make another run and plan for another run to go replenish it, you should have an idea, you should have a number. And then also operating expenses, how much expenses you need to operate that business. If you're on the road, you need to have traveling expense. You need to have money available for different types of it. Maybe your copier went out. Maybe you need to pay for your phone bill. Your cell phone bill is coming up. You need, all these things should be day-to-day kind of giving yourself time to write them all down and make sure everything is going to work through the week and through next week. Okay, and then the next one is cash payments for interest expense. You have to think about your bank loans. Do you have a lot of people, they kind of get behind on their loans, so they start dealing with deficiency cash payments to the finance charges, overdraft fees and stuff like that. So before you get there, you need to have an idea of what your interest expense is and how it can, even though it's an expense, you need to keep it in mind that it can help you too, because you have to make sure you have money available to pay for your loans, so your interest expense stays low and your finance charges and anything to do with your loan charges. And then also your payments for income taxes. This is, a lot of people struggle with income preparation expenses. A lot of us, we fall behind filing. So interest on that starts accumulating when the IRS is, I call it the eye in the sky, and they're constantly watching us, our backs, and all these activities is part of your operating activities, cash. And then over here in the green section, receipts and from your customers is always a plus. If you have a big amount, you're doing good. And then all these are you subtract all all the cash payments, all your payments for your supplies, your operating expense, your interest expense, and activities for your income taxes, payroll taxes. If you're paying payroll taxes, those are taxes that you have to pay quarterly or yearly, annually. So all of that, you subtract that, and that's your daily operating cash available every day. So every day it will fluctuate through the month, through the year. Have a good idea how your business is showing the cash flow statement. Separate business and personal expenses. One of the most important and often most difficult rules to follow when running a small business is keeping your business and personal expenses separate. That line is especially blurry when you first start out, so set up a separate bank account for your business right off the bat. So a lot of us, even myself, when I first started setting up businesses, even for myself, I had a hard time separating my personal checking account, my personal cash from my business. And sometimes I put it together, and at the end of the year, I had a very difficult time separating them. And it becomes more overwhelming and more hectic if you put it together. So it's best to organize it to where you can separate it, your business cash flow from your personal account. Personal accounts involve your personal life, things that you purchase for yourself or your family, food in the house, just your daily needs. And if you have a personal vehicle that you don't use for your business, keep all the maintenance and everything separate from your business. So that's a very good strategy to start. Track every business expense. Since you'll have a separate business account, use it to track every expense with receipts and a dedicated business debit card. This may seem simple, but it's super important to keep up with activity for tax purposes and profit monitoring. Example, envelope system to track receipts by labeling type of expense and loan payments. This should reflect a filing system in an office cabinet. So a lot of us, when people come to me, ask me to, kind of organize their, all the receipts for them so they can prepare their financials for income tax preparation. This is what I see. And a lot of us are like this. We have piles and envelopes, just bundles of the receipts just rolled up. And the best thing, it's good to track it, but at the same time, it's best to, when you, on a daily basis, maybe get an envelopes. If you're operating out of your vehicle, get envelopes, label the envelopes. This is a gas envelope receipts. This is the travel expense. This is my supplies. This is office expense. And as you're going going about your business and you accumulate receipts, make sure you just put them in the different envelopes where they're supposed to go. It's a good filing system. A lot of us are, probably don't run our business from home, and we don't have filing cabinets to start, but envelope system is a very good place to start. Save important bookkeeping records. It's smart to keep these types of documents like payroll and inventory management for tax and other business purposes. A good rule of thumb to help you avoid getting caught without an important document is, if you're in doubt, scan and save it. Some important documents that you can keep for bookkeeping records. bank statements, credit card statements, canceled checks, receipts, bills, customers' invoices, customer payments, sales receipts, deposit slips, tax returns, 1099 forms, payroll documentation, making digital copies of bookkeeping records and storing them in a designated password-protected file on your computer is an efficient way to keep them organized and easily accessible. Or you could get an old school file box and keep it on hand in your office. Either way, just make sure your storage system is secure and safe from the elements. All receipts fade over time. So a filing system, you can get a filing cabinet, a small filing cabinet, or you can get a carry-along bin with a lid that you can buy in Walmart. In the office supply section, they have little small bins, different sizes. And you can also have a notebook type of filing, color coded, like this would be your expenses, your invoices, your, different ways to do your filing. And also all your business cards, business contacts, you should have a Rolodex. And another thing is contracts. If you have contracts for your mortgages, for your insurance, for just the Navajo Nation, if you have contracts with different entities, make sure you have like a notebook for it, or a file it in a file in a filing cabinet. So those are some very important documents that you can keep also. Keep accounting statements up to date. Sending an invoice isn't the same thing as money in your hand. That's why accurate cash flow statements are so important. Depending on your customers, products, and payment system, you may be waiting on accounts receivable longer than you'd like. Without that payment from your customer, you may not have the cash you need to cover bills and other upcoming expenses. This is a great reason to keep an emergency fund for your business. Keep an eye on payments coming in and regularly check for invoices that have not been paid. You may need to send out some past due notices. So keeping track of invoices coming in and going out, either way, you need to keep track of it. Those are your accounts receivables and accounts payables when you have an invoice system. Pay it later or receive it later. So that type of, when you keep an accurate filing system, keeping up to date on all the statements, you have a good flow of incoming cash and outgoing when you're paying bills. What's coming in is paying for your bills. So a lot of times when people owe you and you need to collect payments from them, some of us have a hard time collecting payments. Don't give up on it. Keep at it. Keep asking for payment. Don't let it go, because it's a part of your business. So you can, the best way to do it is if you implement finance charges or late fees on it. Don't get it to where it'll become a legal action between you and the customer, or vice versa. Make all your payments for your business to where you don't get into legal action. Be prepared for major expenses. Even with your carefully maintained balance sheet and cash flow reports, it's hard to predict what will happen in the future. That's why it's always a good idea to plan for significant or significantly surprising expenses with a cushion of savings. Keep a separate emergency fund for your business. Save separate emergency funds for your business and personal life. Both should give you enough cash to cover your expense for 3 to 6 months. For your business, that extra cash can help you cover unplanned large expenses that can't wait. For example, if you own a coffee shop, what would happen if your printer broke down and you had to wait until you saved enough for a new one? Imagine all the business you would lose, but if you had the cash on hand, you could replace the printer and be back to normal in no time. Don't go into debt for your business. Always pay cash. You'll have less risk and your business will be profitable faster when you operate without debt. Put whatever you make back in the business, especially in the beginning, and live lean in both your business and personal life. A future without debt is worth it. So here, I really emphasize getting a emergency fund on the side while you're doing your business, because things break down, equipment wear off, vehicles need repairs, major expenses will come up along the way. Always have 3 to 6 months of sales savings in the bank to help you along the way when you come across emergencies. So get the right accounting method. There's two accounting methods. There's a cash basis accounting method and there's accrual accounting method. Cash basis is the most simple type of accounting method. The accounting method your business uses will have rules about when and how to document revenue and expenses in your records and then reports to the IRS. It will affect how you track everything from your balance sheets to your cash flow statements. There are typically two types of accounting methods most businesses use. So this is the simplest, the cash basis accounting method. This is the simplest method. Income is recorded when you receive the cash and expenses are recorded after the bill is paid. This method gives you a real-time view of cash flow in your business. The accrual accounting method, the IRS requires this method for business that deal with inventory and manufacturing. Revenue is matched with expenses, regardless of when the cash is actually collected. This method can be used for businesses with lengthy business cycles. If it takes long periods of time to collect money from a customer, the accrual method will help you see the money coming in down the road. So the cash-based method is usually the best choice for most businesses. However, if you deal with inventory and manufacturing, the accrual method could be right or even required for you. Ultimately, you and your tax pro can make the decision about which method you prefer. So the cash-based accounting system is very simple and is the best one for small businesses to use. If you have less than 10 employees, 2 to 10 employees, even one is the best method to use. And here I kind of like, you can do a spreadsheet. If you are familiar with Excel on your computer, you can create a spreadsheet showing a journal sheet. This down here is the old school type of journal pages that you can use. You can start with that and you can set it up like that where you account for all your receivables and your payables and all your sales, all your balances. And you have columns for them and where it's coming from and all your, if you do receipt books, receipt books or invoices, you can put the numbers in here, dated, you know, for the month. You can have a journal page for each month. You don't have to roll it into the next month, but you can have it for each month. Whatever you have that's done in this month, you don't have to transfer it to the next month to a new journal page. Whatever is still pending from these pages will go to the next journal page. And then up here is a simple transaction type of a spreadsheet for keeping a balance going in your checking account, your beginning balance, and what you bought, gas, groceries, lunch, you got paid, you know, and whatever income's coming into your business, insurance, telephone bill, you had lunch again, and you know, it just reflects the same way you would run a checkbook for your personal account. It's the same idea, the same way, but this one you can label it for your business, and you can set up this spreadsheet in your Excel on your computer. Is the best way to do it. That's how I do it. But if you're an old school, you have a checkbook that is you can enter, put entries in manually. You can do it. You know, a lot of times when you do it by hand, a lot of times you can miss a number over here. So always have a calculator on hand to double check your numbers, because double checking your numbers and making sure you have that balance. And if you miss, you know, a number and you put the wrong figure in here thinking that's what you have, sometimes you go into overdraft. So you have to be really careful when you're manually entering your numbers for purchases and income coming into your bank account. So, and that's kind of like a checkbook reflects your daily business activities, just like a cash flow statement. And then when you enter it on your, if you're using a journal book, this is how you would set up your pages and the columns, titling each column up here, and just some examples that I put on here. Prepare for personal and business taxes. This is where things can get really hairy for a small business. Don't wait until the last minute to prepare your small business taxes. Avoid surprises and errors by preparing throughout the year for these major taxes. Income tax, you're required to pay income taxes based on your business structure. In some cases, taxes are paid as business income, and for others, they're paid as personal income. Depending on the way you've structured your business legally, you'll have different tax consequences. For example, if you have a sole proprietorship, your business taxes are paid as part of your personal income tax, known as pass-through taxes. But if you have a limited liability company, you'll pay self-employment taxes and no corporate taxes. Again, this is all depends on how you structure your business. Find out what business structure is best for your small business and what the tax implications are for that setup. So payroll tax, if you have employees, there are several steps required to file payroll tax returns. You'll need a federal employment identification number, and you'll need a state identification number for each state your business operates in. These taxes must be deposited either semi-weekly or monthly and reported quarterly. Most new businesses deposit monthly. Sales tax, if your business sells products, you need to collect sales tax from each one of your customers. Sales taxes vary by state, county, and city. This gets even trickier if your company sells products in multiple locations or online. Since the bottom line with a small business tax prep is to be diligent, thorough, and in the loop at all times, talk to a tax pro to get help collecting sales tax correctly. And as if for a small business, the way to simplify it for myself is to file with the state. Make sure you have a state identification number. Make sure you have a federal employment identification number. And once you send in your application and you receive your numbers, the state will know that your business exists. So they will start sending you documents that you would need to report to them monthly, quarterly, or annually. So, excuse me. So make sure you have those ID numbers, because if you send in reports, the ID numbers is what keeps better communication between yourself, your business, and the state, or your business and the federal IRS. So make sure that you have those two numbers to take care of all your tax reporting, and that you can keep in contact with them and have them send you forms that you need to update with them throughout the year. Tax information and forms. Business type, like I said, there's sole proprietor, there's partnership, there's corporation. Within the partnership and corporation, there's limited corporation and limited partnerships too. So there's different types of businesses, but they're all categorized into sole proprietorship, partnership, and corporation. Like I said, you need a federal tax identification number. You need an employer identification number. You can access employee forms. You have to have, or if you have employees, you need to have access to Form W-2s, Form W-4s. If they need to fill those out for you, you need to have them on file. And for all business contracts, anybody you do business, any vendor that you do business with, your supplier, your people that you do business with to operate your business, you need a W-9 from them. So always keep that on hand. That way, at the end of the year, you can send them a 1099. So this also pertains to labor work, people that just do labor for you instead of paying them under payroll. You give them, pay them for their labor. You need a W-9 for them so that you can give them a 1099. And then you always go to the website irs.gov for any information. And for the Arizona Department of Revenue, you go to azdor.gov for all information and contact. Consider hiring an accounting or bookkeeping professional, at least temporarily. Most bookkeepers and accountants, you don't have to employ them full-time. You can, they will charge you by the hour. You can hire them to do your paperwork. It depends on how big your business is. Once a week, they can clear out your 1 day a week, or twice, 2 days a week. They can help you to organize all your expenses and revenues, and help you to put in all your numbers. If you have a larger business, maybe up to 50 employees, maybe you can throughout the month, they can probably take up to 2 weeks of work for them to help you to clear up your book work. So it's best to have a bookkeeping professional or an accountant. A CPA is a higher level person that can oversee what the bookkeeper is doing. the CPA actually helps you to determine your financial situation with the banks, and they're the ones that help you prepare for your tax preparation, and they make sure that everything is documented, and then they turn all your figures over to the tax professional to do your income tax. But if you're very small and you don't have employees, it's just you running the business, then just make sure that you have everything organized for tax preparation. If you don't need to hire a bookkeeper, you can do it all on your own. I recommend that you train yourself and be up to date on all tax information, because every year, you know, tax legislations are going through, and information is changing every day. So thank you. Right now I have a Q&A. So if you have any questions, this is the time to ask. So I'll go ahead and leave it here, and if there's anybody have any questions.
Hi, Arlene. We've had a few questions show up in our chat room. One is, do insurance companies put value on assets?
Yes, they do. And based on the value that they put on the assets, they determine the premium rates that they will charge you. So if you have, the best way to do it is if you have a value on your asset to determine, help them determine the value. You can, a lot of people, they use the Blue Book, like I said, and but they have their own charts also, and they can put value on it, and that's how they determine the premium rates to charge you when you go to them to have insurance on your equipment, your vehicle, your building, any assets that you have.
Great, thank you.
Mm-hmm.
We have another one from Sandy Whitehair, and she asks if marketing can be included with the cost of sales.
Marketing is an expense. It's not necessarily a cost of sales. Cost of sales is inventory that you use to make your product. Those are cost of sales. But marketing is an expense, so you put it under the category of expense.
Okay, great, thank you.
Mm-hmm.
This next question is from Valerie Sosi. She wants to know how you pay yourself.
You can put yourself on payroll under your business, depending on how much revenue that you have. Based on that, a percentage, maybe start with 20% of your weekly or bi-weekly sales, or a monthly, not necessarily a year. But if your business is up and running really good and you have good income through the year, you can give yourself an annual salary and divide that into 12 months. Maybe you want to earn 30,000 a year. So you take 30,000, divide it into 12 months, and then put that on your payroll expense and pay yourself. And that's a really good question, because a lot of small businesses, they don't understand that. So they're just over here just, working really hard, and they think that they're just, doing everything they can, but the business takes up a lot of their time and they're not paying themselves. So it's best to put yourself in there, put yourself on a salary, and or on a monthly income, and that should help you.
And I might piggyback on that with another question. And would it be of value to discuss owner draw?
Say that again. Owner
draw.
Oh, okay. Owner draw is something I wouldn't recommend because you're taking back from the business, but it can be done and it's part of your equity. It decreases your equity balance. So that's where the owner draw comes out of. So it lessens the value of your business, but it can be done, yes.
Okay, thank you.
Mm-hmm.
From Alfonso John asks, how much do you set aside for taxes?
It's just within that emergency fund. The way I explained it, 3 to 6 months of revenue sales. Let's say you're earning through the 1 month through the year, maybe 1 month you're averaging 10,000 a month. So you want to put in savings in your emergency savings, at least 30,000 to 60,000. So once you put that in there and keep it for emergency funds, and emergency fund income tax is part of your emergency fund. Yeah.
Okay, thank you.
Mm-hmm.
From Candace Yazzie, I use my vehicle for both business and personal. How would I be able to keep expenses separate? For example, for repairs and upkeep.
Okay. First of all, I would separate your personal from your business by having a separate bank account first. Set that up, and then also under your bank account, the business bank account, make sure you have a debit card or a credit card with it, and then have a separate personal account. So when you go to do business expense, pay for business expense, you know, you're using your business account and your debit card related, that's attached to that account. That's how I would do it.
Okay.
Mm-hmm.
And solutions for people who have difficulty setting up business accounts?
Mm-hmm.
What would you suggest?
If you can do it cash at home, just make sure that you're very diligent in keeping cash at home in a safe place, and maybe get a small safe for your home where you have it locked up all the time, and then just run your business from there, from your cash box. And you know, that's the only, or you can go to Walmart and you can do a prepaid card from them and put all that cash in there and run that business off of that prepaid card, because a prepaid card will not overdraft. And if you use that, and then you can get your monthly statement from that card too. So based off of that monthly statement, you can put all your figures into your onto your spreadsheet to run your checking account, or just running your reports.
Okay, thank you.
Mm-hmm.
Are there any other questions from our audience? Okay, we have one. LaShawn, is there state taxes on reservation? My business is run. Is that on reservation or off reservation? On reservation. Thank you, LaShawn. State taxes on reservation, as his business is run on the reservation. She's running her business on reservation.
Okay. On the reservation, it's exempt, but I would still file with the state and get a number, because you're going to deal, if you get supplies off the reservation, you need they will have your number on file to give you their wholesale products prices. And then also you have to file with the Navajo Nation and make sure that all of that for tax purposes is on file with the Office of the Navajo Nation Tax Commission. So with that also, and then once you roll all of that, but once you get off the reservation also, you're already filed with the state, you have an EIN number, and you can do business both on the reservation and off the reservation, but only income coming in off the reservation will be taxed, okay? But on the reservation, you're also dealing with sales tax, so you have to pay sales tax to the Navajo Nation. So you have tax reporting to them, not necessarily the state, but then if you go off the reservation to do business, then when you're selling off the reservation, you have to pay sales tax to whatever state that you're selling in.
Okay, Uriah McCarthy asks, what's the best software you would recommend for digital accounting?
I'm a QuickBooks person. I've used it. A lot of people use Quicken, but I'm more drawn to the QuickBooks. It's very, all of them are accurate. All of them are good. I'm just drawn to QuickBooks. So they're all good softwares.
Okay, LaShawn Kate asks, I sell cookies at a tribally run gas station. Do I pay tax on that?
Where? On the reservation or off the reservation?
I'm going to guess on.
Okay. If it's, yeah, wherever, since Navajo Nation has sales tax, yes, sales tax is included on the reservation.
Okay, thank you.
Mm-hmm.
All right, we have 5 minutes left, and Marcia has some things that she would like to tell you about. If you have additional questions, go ahead and forward those to Marcia, and she can send them on to Arlene. And I'm trusting, I really hope, Arlene, that you'll be open to taking questions after the fact, and if we can give your contact information to the participants. Thank you.
Thank you.
Thank you, everyone, for coming.